Gold had a great day on Friday. So did silver. They didn't hit new highs. Silver closed just below $39 an ounce. Gold was about maybe $33.70 or so not quite above 3,400. But the rotation that we've had, with foreign central banks out of dollars and out of treasuries into gold is going to accelerate as a result of this shift in Fed policy, right? Central banks are going to be more interested and more aggressive in their movement out of U.S. dollars because the Fed has basically said, we are going to sacrifice the inflation side of the mandate because of the political pressure put on us by the Trump administration, which is still early days. We still got, 3.5 years left of Trump, and wait till Trump, gets complete control of the Fed. Wait till Powell is gone and some flunky has taken his place, and they get some more FOMC members, right? He's going to completely have control of the Fed, and that means get rid of your dollars. That means buy gold. And again, it's not just central banks that should be doing that. Everybody should be doing that, right? Individuals should be doing that. They're not doing it yet. Again, I talk about the fact that at Schiff Gold, it's not like our phones are ringing off the hook. They should be, right? People should be calling in droves. We probably, we still get more people, I think, selling their gold and silver. They think they're getting a good price. They're getting a lousy price. Prices, gold and silver prices are just going to keep going up. Why? Because the dollar is just going to keep going down. Powell just told you that, right? We're going to sacrifice the dollar. We don't care, right? We're cutting rates, even though inflation is above target. But more importantly, they're going to go to QE because what is going to happen? They're going to cut rates and long rates are going to go up. Then what? Because they want long rates to go down. That's the main goal. They want to get long-term interest rates down so the government, they think, can refinance the national debt at lower rates. They want to goose the housing market, right? Instead of doing the right thing by letting home prices go down, they want mortgage rates to go down so people can overpay for these homes. But when mortgage rates don't go down, then they're going to still want the Fed to bring them down. And how are they going to do that? Quantitative easing, where the Fed goes into the market and buys treasuries, or maybe starts buying the mortgage-backed securities again. They haven't been buying them at all. They've just been buying treasuries. In fact, they've been selling mortgage-backed securities as part of quantitative tightening. So obviously that's going to come to an end. I mean, that may come to an end in September. But there's going to be a lot of pressure on the Fed to resume quantitative easing in order to bring interest rates down. And that is going to bring the dollar way down. And you got to prepare for that. Look what happened to gold prices. Again, gold up. Gold is up 28% this year. It's a nice move, right? The year's not over yet. We're up 28% in the price of gold. Now, Bitcoin got all the headlines in 2025. That's all the financial community could talk about. Bitcoin is barely up. In fact, it's not even up 22%. Year to date. In fact, it was up 22% when I first started the podcast, but now it's dropped about $1,000. When I started doing this podcast about 40 minutes ago, and I looked at Bitcoin, it was 113,500, and it wasn't up 22% on the year. Now we're down 1,000. So Bitcoin isn't even up 21% now. It's at 112,500. So Bitcoin up 21% on the year. Gold up 28%. Right? What I thought Bitcoin was supposed to be the fastest horse in the race, right? That's what who said that? That was Paul Tudor Jones, right? Oh, I'm buying Bitcoin. It's going to be the fastest horse in the race. Well, it's gold's got a nice lead this year on Bitcoin. In fact, I think they're sending Bitcoin back to the stable. In fact, eventually they're sending Bitcoin to the glue factory. But look at the gold and silver mining stocks. The GDX and the GDXJ were up 3 1/3% on the week. And the GDX and the GDXJ closed the week on new multi-year highs. I mean, maybe 12, 13-year highs. Year to date, the GDX is up 77.5%. and the GDXJ is up 78.5%. Those are huge returns. And, we're not even at the halfway mark for the third quarter. And we got those kind of returns. These gold stocks are on pace to more than double as a group in 2025. I said this when Donald Trump proclaimed that America was on the cusp or beginning, whatever, a new golden age. I said he means that literally. It's going to be a golden age for gold. And so far, gold is shining bright in the Trump presidency. But what's shining even brighter are the gold and silver mining stocks. So while everybody wanted to buy fool's gold and Bitcoin-related stocks, had they just bought gold stocks instead, they'd have made a lot more money. And in fact, even though gold and silver mining stocks are the best performing sector of the market, right? By far, there's not another sector that comes anywhere close, right? Precious metals mining stocks, hands down, the best performing group in the U.S. Why do they get no coverage? Turn on CNBC, turn on Fox Business. They don't talk about these stocks. I mean, maybe you get to Fast Money on CNBC and somebody will say, yeah, I like Barrick Gold. I like the GDX. Okay. Yeah. Someone will mention that like as a pick, but they really don't focus on it. Instead, they spend so much coverage on Bitcoin, right? And MicroStrategy. You're much better off on the gold stocks this year than MicroStrategy. Not even close. So this is a stealth bull market. No one is talking about it. The financial community isn't covering the story. You have the best performing sector in the market, and it's not even worthy of coverage as far as the media is concerned. They're missing the boat. People who rely on financial news are missing the boat, right? If you're watching my podcast, if you're relying on the Peter Schiff show, then hopefully you're not. Hopefully you're following my advice and you're buying gold and silver, and more particularly, you're buying the mining stocks, because even though they're up 78% on the year, they're still cheap. That's how cheap they were before they went up. So there's plenty of time to buy these things. And the fact that the media hasn't even noticed it yet, that shows you how early we are. I mean, when did the media start talking about Bitcoin? Think about how much Bitcoin went up before CNBC finally jumped on the bandwagon, right? I mean, and so imagine where gold's going to have to be before we get a bunch of believers there, right? So we got a long time, so you got to buy your gold. Remember, the symbol on my gold fund is EPGIX. And the reason I think my gold fund is the one to buy, and of course, obviously I'm biased because I make money if you buy my gold fund, right? I don't make any money if you buy somebody else's. So obviously, I'm biased. But what I like about it, other than the fact that Adrian Day manages it, and I think Adrian forgot more about the mining industry than all these other managers know, probably combined. Right? You don't have the brightest people, managing these gold portfolios because they're all managing tech and something like that. That's exciting and makes money for the investment bankers, right? You got the dunces that are assigned metals and mining, right? It's like nobody wants to draw that straw, but Adrian, lives and breathes this stuff. I mean, he's in mining because he wants to be there, not because he was the worst. He had the lowest scores in his class, and he got delegated to the job nobody wanted. But we've got all these small stocks, positions in these small stocks. It's the bigger stocks, and even the junior stocks, like in the GDXJ, are larger than a lot of the small stocks that we own. And so because we have this allocation of these small stocks, it's a drag on performance now. But once those things start to move, I think it's going to be like lightning speed. I think they're going to have such a big move that it will dwarf the moves in the big stocks. And that's when it's going to kick in. So we've got that jet fuel for our portfolio, and we're just ready to go. And so I think now you want to take advantage of that because it's very hard to buy these positions now. There's no liquidity there. And so I think ultimately we're going to have an even bigger move, and we're going to way outperform the indexes that just have the bigger companies, even though we've underperformed. But I think, we're still up maybe 65%. I forget the exact amount year to date. That's still not too shabby. And so now that Powell has his mind right, we're going to get rate cuts. I think I would be pretty surprised if we didn't get a rate cut in September now. And I think the markets will be surprised in a negative way if we don't get a rate cut in September. But in order to lay the foundation for the September rate cut, Powell basically had to talk about how weak the economy was. And as I just mentioned, I've never really seen him deliver such a sober assessment of the economy. Now, I mean, that couldn't please Trump because, Trump is out there talking about how great the economy is, how it's a booming economy, how it's the hottest economy in the world, right? But the reason that the reason that Powell says that they need to adjust their policy is because we have a weak economy. In fact, Powell went out of his way to compare the economy today to the economy 1 year ago, right? Now, he didn't specifically say the Trump economy and the Biden economy, but when he's talking about conditions today versus a year ago, well, a year ago, Biden was president. So when you compare the economy in July or August 2025 to the economy as it stood in July or August of 2024, you're making a direct comparison between the Trump economy and the Biden economy. And Powell said that there can be no doubt that the economy today is weaker than it was a year ago. GDP growth. In fact, he mentioned it was about half. According, I think, to his assessment, he talked about how it was running at a little over 2% a year ago, and now it's slowed down to 1% or just over 1%. So in other words, the economy is growing at half the pace that it was growing at under Biden. But not only did he talk about the weakness in the economy, he talked about the strength of inflation. And he said inflation is above target and moving in the wrong direction. Up, not down. And he mentioned how inflation today, the rate today, is higher than the rate a year ago. So the Fed is, not making progress. In fact, it's losing ground in the battle against inflation. So according to Powell, the economy is weaker and inflation is stronger under Trump than it was under Biden. Now, again, Trump is telling everybody that we got the greatest economy in the world now, but that a year ago under Biden, we had the worst economy in the history of the country. And of course, he claims that the whole thing turned around miraculously because he was elected. And now we have the strongest economy, the hottest economy in the world. But the economy that we have today, at least as assessed by the Federal Reserve, is weaker than it was under Biden, except for inflation, which is stronger. So in other words, we got stagflation. I mean, if we didn't have stagflation under Biden, and I thought we did, but if people weren't sure, well, we definitely have it now because the economy has gotten weaker and inflation has gotten stronger. But what does that say about the Trump economy? Because if you're going to judge the Trump economy by Donald Trump's own standards, if, according to Donald Trump, we had the worst economy ever under Biden, and now it's worse under Trump, well, then today's economy has to be the worst economy ever. Because if it's worse than it was under Biden, well, if Biden was the worst ever and he's now beaten that for badness, right? This is the worst. Because not only is growth weaker, but inflation is stronger. Now, the reason that, Powell gave or, the indication of a rate cut was he said that now we have we have these two mandates. We've got employment and inflation. He said the risk to employment is now down, right? That unemployment is going to go up. So the employment risk is to the downside. And he said the inflation risk is to the upside. And he admitted that that was not a good place to be, but that's where we are. But then he said that our policy rate is still restrictive. And he indicated that given it could go either way, right? He's basically saying it's a coin toss. He doesn't really know. And so we have risks to both sides of the mandate, yet we have a interest rate, a policy that is still restrictive. And then he said, which means it may be time for a change. And maybe meaning it is time, right? That's why he's saying this. And so what he's saying is, if we really don't know what's going to happen, right, we should be neutral. So we shouldn't have a policy that skews in either direction because we really don't know what the problem is. Is it going to be a rise in unemployment or a rise in inflation? So I think what Powell was telling the markets is it's time to, shift gears to neutral, wherever the hell that is, right? But wherever it is, according to Powell, it's lower than where we are right now. So in order to get from restrictive to neutral, we got to cut rates. And so that's what's coming. But he didn't indicate how far above neutral we are. Are we 25 basis points, 50 basis points, 100 basis points? And how quickly does the Fed want to get down to neutral? Now, he didn't mention anything about the balance sheet, about quantitative tightening. But if the Fed is still doing quantitative tightening and they feel that, the risks are to both sides of their mandate equally, then I think that we're probably getting pretty close to the official end of quantitative tightening. Remember, they've already tapered it off. So they're not, selling as much of their balance sheet as they were. But I think the next step is going to be to at least pause it. And of course, that's going to be the precursor to a return to quantitative easing, which is coming. I thought we probably would have got quantitative easing already. But, the Fed hasn't had to do that. I believe they're going to do that when interest rates really, really move up.
Gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges, and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers. But physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics, it's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming. Young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation. Silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.